Happy Valentine's Day. It's February 14th, 2025. We're looking at SPX on the monthly time frame, and then we're going to go through SPY. We're also going to check out some of these megatech stocks here. I'm putting together a puzzle. We have a lot of pieces to put together, so make sure you stick around. Play this at 1.25 or 1.5 speed, so you can get this information fast and you can watch other videos and get all this information in a shorter amount of time, okay? So you're going to have this bull bear argument, and it's constant, right? It's always happening. I can't be on this bullish side. There is a count, and I'll show you on those lower time frames what to expect if you're a bull. But until we get over this trend line here, this confluence that we're at right now, that I can't really jump on board that, even though my portfolio, our options portfolio, is neutral. Okay, we have puts on one end and we have calls on the other, and we want to see some sort of move. So if you're brand new here, I want to show you this trend line that's so important, a historic confluence here of trend lines. And so we're doing this video at 11:15 Eastern Standard Time, so consider becoming a YouTube member if you want to get these intraday to complement whatever you're looking at. Otherwise, it just supports the channel. If not, then it comes out at 4 p.m. No big deal, okay? So let's jump into it. We have 1929. We have the 2000 top. This trend line comes right here with 2025, okay? We have 2008. We have 2021 in confluence right here, right now. And so what kind of reaction is going to happen here? We've been here for over 3 months, okay? We reached here over 3 months ago and have been consolidating since. So yes, we're in a bullish stance. So what we want to see is this beautiful monthly candle get above and close above this trend line here. All right, that's the most important thing for the bulls. Now, on the weekly time frame, let's go over to SPY. Sorry about that. SPY is showing the same thing on that monthly time frame. I just want to show you we built a consolidation area and we're breaking out from that, okay? So it's very important that we don't get a wick on the monthly candle back into the zone, just like these two other candles, okay? We got up there, tried to get over, failed. Are we going to fail this time? That's the huge question right now. This is a breakout. All right. We made a new all-time high today. And with that, we have negative divergence. All right. Negative divergence. Not on the MACD. On the weekly time frame, I'm going to zoom through here. On this weekly, same concept. All right. We're back at that trend line. I'm just going to make this trend line extend it so I match these up just precisely with the tops there. Oops, I did the left side. Okay, so we're right at that trend line right here, right now, once again on the weekly time frame. We might be a point away or so, but we don't have to actually touch it. Now, we made all-time highs, so again, on the monthly time frame, negative divergence. We already had this divergence confirm here. So in order to be bullish in any sort of longer time frame, you need to see this yellow MACD line cross to the upside. All right, we're still negative. We're still red on a histogram here. You want to see a close with a green histogram and get, you still might have a downtrend, but you want to see this start to curl up and get it above there. That's the only way that this could be sustainable. All right, negative divergence again today. Negative divergence today. All right, so we're looking for time and price. We're still in that, right? We're in that cluster. So we're looking for a top. I'm reiterating that we have another, the week of next week, it's 218. That's next week's bar. Remember, this a month or the weekly time frame, and so these time and price conditions are good for that week. It's not necessarily the 18th in particular. It's just the week of. Okay, so we're in this cluster. We're looking for a top. Now we're going to give you this bullish stance on the lower time frames because obviously the market's going up. So we want to, we want to appreciate that and continue to show good information on both sides. Okay, so here's what we're looking at on the daily time frame. This is a negative look towards the market. Okay, and what do I mean by negative look to it? Well, we're still considering this one pattern here. So we have this megaphone type pattern, and we're reversing off the top. I know it didn't hit it by the tick. We also have a trend line just like a point above us here. But if you don't use the wicks, we're easily at resistance right now. So, but give it the benefit of the doubt, put it at the top of the wicks there, and we should see, possibly another point or two to the upside. So we have a little bit of room. Now, in this bearish fashion, I can't get bullish right at resistance. There's no way. But I want to be ready, and I basically have a neutral position where, and we'll look at those on the 65. Some of these tech stocks should rotate into if this is the case. So bearish, it's just likely. I leave this up here because when a move happens, it's going to happen quickly and swiftly. So we're looking at about 7-8% down to the 200, down to the lower end of this pattern, 200 moving average, and also the breakout point that we've been talking about in so many videos. Now, I'm looking at my portfolio right now, and I noticed that it's actually doing really well in just the fact today. Just the fact that some of the puts are working, the market's not really moving up, and then the individual names that I'll show you in just a little bit are help maybe rotating in there. They're not going down. The risk is less to the downside with the ones that have already been beaten up. So that's kind of the strategy there. But anyway, so what we want to look at, we see price lost the moving averages, got back on them, and we're just kind of stair-stepping, holding on to them with dear life, and finally had a nice push off this 50 moving average. So we're above all the moving averages now. So this 8 EMA is going to be so key because we're looking at this possibly being a 1-2 setup, and now you want to have a wave 3, and now we should be on wave 3 of 3. Okay, so if this thing is going to move to 53, 5400 or even higher, we're going to have to see this wave 3 play out. And likely in wave 3s, you don't lose that momentum indicator, the 8 EMA and the 20 trending indicator. Okay, that's a 20 simple moving average. So those will be key here, even if we consolidate or come back a little bit. I'll show you what level. I think it's 605. I'll show you that in just a minute. So today, again, negative divergence. We can't confirm that because the MACD actually started to curl up today. So we can't confirm that on the MACD, but it's there. It's ready. RSI, negative divergence. Slow Stoke, negative divergence. Let's see here. Let's go over to the Qs just to show you on the daily time frame. I have a couple things to show you on the daily. So the Qs, clearly a breakout, right? Just massive breakout. Or, and this should be obvious because price shouldn't break back down below this trend line, right? In this zone that we've been in, which we've gotten out before, but it quickly removed itself. Well, 3 days there, 3 days there. So we're back at like the 90% retracement. And if you're even a bear at all, you're probably looking at this being an A, a B, and then a 1, 2, 3, 4, and 5 wave ending diagonal move to the upside. Okay. Now, I don't know if that's the case or not. You have to respect this breakout. And so unless this breaks back down, then this is a breakout. It should continue higher. All right. Again, this should be a 1, a 2, and you should be breaking out of a wave 3. And it looks like, this should be nesting in 1, 2, 1, 2, and then wave 3 should play out. And again, it shouldn't break underneath this 8 EMA, and especially not this trend line. So one thing I want to look at while we're on the daily time frame is the VIX. So the VIX is at another trend line. I know that we had it from the bottom last time. All right. But this one is nice and clean, and it matches exactly with the downtrend line that we were looking at from the weekly time frame. I know I'm jumping around right here. Okay, we have that wedge, and we're back testing that wedge, and you see the zone that I mapped out here. We're right at the bottom of that zone there. So does that zone hold, or are we back testing the wedge more? We should not break the bottom here. That's the most important thing if you're a bear, and we should start to see this lift. Now back to the daily. So there's that trend line. We're back testing in confluence perfectly with this triangle, and I'll duplicate this because what this is telling me, if this triangle is valid, and you can push it here. I think I'll push it all the way out here just to get the benefit of doubt. If price starts to go up there, then I'll have something going on. So some sort of pennant, right? We're at the bottom of it with lots of good touches on there. I'm getting a little reaction so far. But most importantly, this marks the bottom here, the VIX, right? Where this arrow is where the tech market topped so far. Now we're holding well above there, and this is all one move. And now we're consolidating that move, right? That's not much different than this low here. You got a huge move, but then really just consolidated it and did not make a new low. Made a wedge pattern out of that big move. And now we're breaking out of that and forming another wedge. So I do think we're going to see this reverse pretty soon here. Going into next week, possibly today. I don't know. And another thing I want to show you is we already made our back test, okay? This is going to be super important. The bonds are lifting, but look at the 10-year notes, the treasury rate is just dropping right now. Just dropping like a rock. Already had our move here. And what does that mean? It means that you have relative strength on the way up here for tech. And now you have tech weakness with this breaking down. And this also is going to break the market in general, saying, hey, there's a recession coming. Rates are dropping. We need to get those rates down to stimulate the economy. But by then, the stock market has to reprice. And then later, in the future, a couple years down the road, this will start working into the economy and playing out well. But bearish rising wedge, breakdown, back test, a fake break, and now dropping. That's going to jump into the market soon if this continues to drop like this. So I just wanted to point that out. Now let's look at some of the tech stocks on the 65. So it jumped into Amazon and then two others I'll show you. There's Amazon. You have this beautiful channel, and here's the bottom of the channel. I know it's not perfect. It doesn't have to be. It's a zone. And this is you have a positive divergence here. So if the market's going to hold up and or go higher, we're going to have to see some participation from Amazon. And don't get me wrong, this could continue to just drop at this point. I've seen it happen. But we're long Amazon. And Google, just on a simple look here, we're back at the channel bottom here. So Google, and we don't have to go to all-time highs. That's not the point. They should be relatively stronger if we get some rotation for the market to go higher. The other guys have gone high enough. Meta, just insane. And so these should participate if the market is going any higher. Or, you know, we'll have to see NVIDIA and Meta and probably Tesla just rocket to the upside without participation from the others. The other one that we took yesterday was Microsoft. Again, a channel bottom, making a higher low at this point, get confirmation above at 411. We're going to have to see some participation from these guys, okay? So that is how I'm playing it, because the downside for these are just so limited. So I don't have a whole lot to lose on these calls while looking for the market to actually reverse to the downside, okay? So now let's go through the indices. And again, we're right at, and we don't have to touch it, but likely that we will. We're just resting here on the options expected move for the week. You know, go figure how important this is. But if price wants to consolidate here and go just a little bit higher from maybe Microsoft and Amazon, then we have a little bit to go. We get above this trend line here, and that's going to take us above the 1929 and 2008 confluence, and then you can really start to get bullish there. But what I would like to see in the bullish time aspect here is if this is a 1-2 setup, then we want to see, this is pretty much a straight line right here, and that can just continue to go on. It can, but to see some more structure where this is a 1-2 and we have a 1-2, and if we're going to continue to just really trend up, I'd like to see maybe even a back test here to 605. So overall, we want this to, in a bullish sense, just keep a clean chart. Okay, even better on the daily. Just keep a clean chart here. You had the breakout. You want to hold on to this 8 EMA and continue to trend higher. This is a wave 3. If this is a bullish trend, this is a wave 3. It should not break back under here. All right, it should continue to go higher for an impulsive 3, and then a correction for 4 and 5, all the way up to some targets there. Would be, the first target would be 618, and then the second target would be 630. All right, so that's where, if we get above that megaphone pattern. All right, so on the daily time frame, we didn't go through time and price. We have time and price at 220, so that's next week. So we'll see where price is going into that. Simple as that. Nothing to really report there. There's our look. There's our flag. And breaking out of this flag, if we break back into it, we consider that a fake break. And then really the nail in the coffin is if this trend line breaks. All right. And then you have a breakdown of trend, and then we can push on those bear positions. All right, and we are in a cluster right now for the hourly time frame. So this, we might get a high today. We might have a bad Monday. We'll see. You have the 19th, 20th, all that. There's cluster of the 20th coming up. So looking good. You know, obviously we're bearish through here against the resistance, but we'll see what happens now. And again, this trend line that's up above here, from this point, this top, that's from the top of the wick. I don't have to use the wicks. So here's what I'll do. I'll just duplicate this and we'll make it a zone. So we have the bottom, here's the bodies of that move, and here's the body of here. And you see we're pushing off of that right now. So we're in a resistance zone at this point. All right, I hope that helps. We want to hold 605 if you're a bull. You want to hold we'll just call it 612, a little bit below, if you're a bear. Qs. Again, for now, this is just a breakout. Complete breakout. We're rejecting off of this gap above here. So you want to close that gap if you're bullish, but you want to hold on to this megaphone pattern. SMH. Now with SMH, again, I can't trust, now that we're back at resistance, I can't trust that this is not a bear flag. Let me get rid of this. This is the bear flag. And all we're doing is back testing it over and over and over and eked out a new high here, which makes sense. That would mean this is an A, B, and this is a 1, 2, 3, 4, and 5 for C. Okay, you can't, well, however you want to count it, 1, 2, 3, 4 here and 5. However, but the whole point, and I can move this now that it made a new high, is we're forming a wedge here and back testing this. You see, this could have been a ascending triangle, and it's still above here, so it could possibly still continue to the upside, but this ascending triangle just it hasn't broken out. A nice big candle, this typically, if you're in a bullish market here, continuation to be bullish, right? You just break out from this point and start closing this gap here, but we're really just forming a wedge, a real tight price action right here on this bear flag bottom here. That's closed. So, just no confirmation that we're going to go higher than those all-time highs that that megaphone top that we're looking at on SPY.